Hello, everyone. I'm Ron Insana, the CEO of iFi.AI. In a prior recording, we walked you through the system that we've developed to help self-directed individual traders make better decisions using AI protocols that we use for $6 billion worth of institutional assets under advisement. And in this instance, we're trying to help individuals make better trading decisions, whether over a 1 day or a 30-day period. I'd like to take you through some of the examples of how exactly we can use this with respect to making those decisions as you trade on a daily basis. So here's our lead page, the Explore page on iFi.AI. This gives you a look at the most popularly traded exchange-traded funds, the S&P 500, the QQQ, the NASDAQ 100, the IWM, which is the Russell 2000, and the TLT, which represents long-term treasury bonds. And below that, you'll see our best ideas as well, individual stocks with expected forecasted rates of return over a 1 and 30-day period. Now, if you're trading, let's say, for instance, exchange-traded funds, let's go into the S&P 500 and see exactly what this tells us. Over the next 30 days, our models are forecasting a better than 2.2% gain for the S&P 500, and that's with a degree of confidence about 62% and a 74% historical accuracy rate. Now, there's a pretty wide range of expectations, as you can see right here. The low expected return over a 30-day period is 3.5%, the high 6.5%. So there's a pretty wide variance there, but there's a decent degree of confidence that the S&P is likely to go up. Now, if you want to understand why our models think that the S&P 500 is going to do what we suggest it might do, here's an AI generative summary that will give you all the various inputs that will tell you why the model is forecasting that better than 2% rate of return over the next 30 days. I'm not going to let that read out fully, but you could also go to a graph, as I just clicked on here, and this will tell you exactly how accurate the forecast has been going back over time. You can see effectively, and while there were some periods to the right of the screen where the S&P underperformed the forecast, been tracking almost exactly with the S&P 500's performance, our forecasts that have been delivered on a 30-day basis over the last month and a half. You could see that right there. And prior to that, going back in history, it's tracked pretty closely as well. Now, if you want to do the very same thing with individual stocks, let's take a look at some of our best ideas. You can go in and do the very same thing with all publicly traded stocks in the United States. Now, leading our list of best ideas is Marvell Technology. The expected gain is rather large here, and the degree of confidence is also quite high, 89%. And again, this is looking for a 43% gain, the low forecast about 35, the high just about 46. And so that is obviously quite a strong forecast for an individual stock to move in a 30-day period, but we've had some prior experience with this. When Tesla was tanking several months ago, our model produced an expected rate of return of over 40%. The next day, Tesla reported its earnings and actually moved up 35% in a 5-day period. We've had some similar results with the likes of Snap. Also, Marathon Oil, which was recently the recipient of a takeover bid, also had a relatively strong 30-day forecast that was met relatively quickly. Now, how you deal with this is an open question. And let's go back just very quickly and look at the graph to see how well Marvell has tracked here. And you can see that it has underperformed a little bit our expectations, but has recently kind of fallen in line with what the model expects Marvell to do over the next 30 days. And so this is the way in which you would use this. Now, how you trade in and out of this stock is entirely up to you. Those are recommendations we simply don't make. We offer an assist, an AI assist, if you will, that suggests an ETF or an individual stock will do a certain or perform a certain way over a certain period of time, 1 day and 30-day periods, and how you decide to deal with the gains if they should occur up front rather than towards the back end of the forecast is entirely up to you. Some folks might like to take profits if the bulk of the gain is indeed already realized. Others might like to let it run the entire 30-day period, or even take some protective action to lock in those gains and watch the forecasts as they are in fact reinstituted each and every day. So that's the way in which we believe the tool is best used. You can use the Explore page, and I will get in future conversations into how you can deal with some of the other features that we have, like the screeners and some of our instructional tools that exist in the Learn navigation bar at the very top of your screen. This is how you can use the tools that we provide at iFi.AI. If you're an active, self-directed trader, we'll be back with more explanations in the future.